Welcome to the webinar, guys. This is the first webinar that we're doing over at Forex Watchers. That's public. How do you guys like the new site? Have you guys gone through the course? We've opened up the course for you guys. We've made it free. And basically, I think, this was something that we used to sell for, I don't know, $300-400. And then we also had it at Udemy for like $50, and then we just opened it up for the public for free. So hope you guys will enjoy the course. I missed the chat room. Oh, you mean on Urban Forex? Yeah, that one, Urban Forex, is shut down. The chat room wasn't actually going anywhere. There was a few people talking here and there. There's a lot of advertising, a lot of folks, we cross-reference the information, whatever's typed in the chat room, and not very credible information. Let's put it that way. Okay. We still need it. Yeah, I get it. Well, let's see. If we get more than 50 requests for a chat room, we'll get it up. But for now, no. Rainer, if you're talking about the course, it's on forexwatchers.com. Small issue with the next lesson button on the course. Oh, has it still not been fixed yet? Let me just check it for you guys real quick. Okay, fast track course. Okay, say no new money. Oh yeah, not fixed yet. Okay, I'll get that fixed. It should be done in the next 6 hours or so. I'll get a staff to do it. Thank you for notifying us on that. Okay, so let me open up TradingView. Okay, anyone new today? Anyone new to our conference rooms here or webinar? A live webinar, but seeing videos. Okay, so welcome. First time after 2 years. Okay, great. Hello, Raganathan. All right, so let's get started here. So my name's Naveen Prithiani. I'm your host here at forexwatchers.com, and basically we're gonna be discussing divergence today. How to master the art of divergence. Now, do you guys use divergence with RSI? Okay, stochastic. Okay. Well, let's put up some stochastics here. Okay, I'm gonna insert it. 833. Okay, let's put up 833 for eight candles past, and then 3 and 3. Okay, here we go. So here we got it all set up. Now let's start from the beginning. So what's a divergence? A divergence is when price and indicators are doing something that is not visible. Okay, now for example, when these lines go up, all indicators do what according to price? What do they do? What's an indicator's job? Yeah, they follow price, right? So if price is going up like this, let me maximize this and remove all that. So if price is going up here, then so does your indicator start to go up. Okay? But notice one thing here. Notice how each thing makes a higher high, higher high, higher high, higher high. But on your indicator, you're not getting that higher high. In fact, you're getting something different. Almost like lower highs. That's a divergence. In simple terminology, we call it the opposite. When you see the opposite happening, it's basically an indication that price will turn. Does that make sense? There's a lot more to the strategy, but we're just gonna go into the different areas of divergence. How can you use them in an uptrend? How can you use them in a downtrend and stuff like that? And then we'll do some practices so you guys can point out if something is a divergence or not. Okay. Divergence failed on Aussie yen pair. Okay, let's take a look. What time frame, Papo? 15 minutes. Okay. Paresh, does divergence work all the time? No, not all the time. Because here's an instance where divergence might not work, Papo. This is also the same instance here. Now notice this high that keeps going up. How many swings does this thing have? 1, 2, 3, 4, 5. It's still going. Usually in 2 or 3 swings, a market refreshes before continuing. For example, here. Here's a single swing, here's a second swing, and then a refresh phase before continuing. This one just keeps going. So when you have stuff like that, you're seeing on a higher time frame that this is probably the first major move that's happening. Okay, when your movement just never fades, they call it the fade, right? When an up move and you're trying to sell an up move, it's called fading the uptrend. You're trying to grab the turn. Okay, so when you're trying to do that and it's not working, the problem is on a higher time frame, let's say the 4 hours, this thing is strongly just started. Okay, so then you'll have to use higher time frames, SNR and stuff like that to gauge an area where it may start showing some reaction. All right, so Joe, how would you trade Japanese yen pairs with a recent up move and barely any retracement? Well, we'll get into that. Tej, Naveen, would it be possible to darken the indicator color? It's very light with the white background. Okay, sure. In fact, maybe I can make the background darker. No. Here, I'll just make it darker, like you said. Is that better? All right, so now moving on. Let's look at some examples. Okay, let's go to Aussie USD, for example. Okay, now in Aussie USD, oh, no worries. Aussie USD, okay. So we're on a 4-hour chart here. Now, I can do this. I can look as detailed as this, where I can say, here we go, that's a lower high. And then I can do the same thing below me into the indicator, which is right there, right? If I look just below, and I'm like, okay, well, what did I do? Okay, if I look just below, I'm like, okay, well, that made a lower high also. So does anything change? Is there anything opposite? No. The best times when we like to see opposites is when it comes from the extremes. Now, when I say it comes from the extremes, it's above or below the dotted lines. Those are extremes. If it comes from that area, the opposites, it's very nice. It's actually quite powerful. Okay, now, on the other hand, take a look at this one. But when it was going downwards, let's do the downside. When it was going downwards, it made lower lows sequencing. If I do this lower low sequencing that I just connected, and I look at it below it, I'm going to put the line here so you can see just below it. And I do the same thing. I connect the low from here to the next low over there. Is that the same as this one? Okay, it's the opposite. Okay, so then we have an indication of what we call divergence. Now, whether you want to call that, the terminology that they use is, what's the word? I haven't used it in a while. They have regular divergence. They have, help me out here, guys. What's the other words for divergences? There's hidden divergences. Yeah, there we go. Yeah. So I'm just going to make it simplified for you guys. Just use the word opposite. Keep it simple, and it should help. So, can you show an example when the indicator lags? I mean, gives wrong signals? Well, right here. When this market is going down, here the indicator is not going down. It's actually making a higher higher low. Sorry. So one thing when you want to do when you do your divergences is if you connect the lows on your price, make sure you connect the lows on your indicator. Don't connect the highs on the indicator. You do the exact same thing down here. Okay, and usually in the exact same area or vicinity. Okay? All right, so let's look at some more examples. So these are indications of market turns. Now, here's the thing. Did the market turn here or did the market turn here? Number one or number two? Yeah, the second one. But then we had the divergence on the first one, and a good 16 hours to 24 hours passed by before this thing happened. So how would we know to wait for the next one, or is it going to be the first one? Who's taking my course? Who's taking that fast track course on forexwatchers.com? Okay, it's free. You guys should have all done it by now. Halfway? Halfway? Okay. Well, take a look here. So I'm going to help you implement divergence with the way to read the markets. Okay? So bear with me here. It might be a little bit difficult, but I'll repeat as many times as needed. Okay. Markets are in an uptrend. Okay? Earlier, just in the beginning of the webinar, I said when the markets are moving in a certain direction, after a few swings, they need to refresh before continuing. Okay, a refresh can be two things, a pullback or a consolidation. Okay, a pullback means the sellers are competing against this buyer. Okay, or you can call it the buyer is removing some of his money. Okay, whichever language you want to use, that's fine. On the other hand, we can say when the market's in an uptrend and then instead of pulling back it goes sideways, we can say the sellers have no power and the uptrend is very powerful. Okay? Or we can say the buyers are not removing any money. They're maintaining grounds. Okay? So keep this ideology in mind. Okay? Don't just label things that just because it's a range, I need to learn how to trade a range, or let me connect the dots. No. Keep it a little bit more complex than that. And that's too simplistic. Okay. Now, once you see this pullback happen, what's the speed of the pullback? What's this first one here? How does that look? Strong, weak, sharp. Okay. Following that, yeah, 600 kilometer speed. Okay. And then following that, what's the pullback ratio? Okay. Slow, small retracement. Has it surpassed this? No. Okay, then it goes down again. How much further does he go down? Okay, doesn't go down much further, does he? He goes very little. So if you compare the first leg to the second one, you're like, oh, the guy barely went anything. Does everyone have sound issues? Back to the screen. You guys can still see the screen? So, this was the first move down. Very big. Shallow retracement. Very small retracement, which means the sell is very strong. Then the next sell comes in. Okay, what does that tell you? The next sell. How much more did he go? Compared to the first guy? Very little. Not much, right? And then how much retracement did he do? Okay? Also small, but did he overcome the guy who started the second move? Okay? Not yet. Not yet. Okay, then he makes another move down. Minor. Doesn't go below. And this time, he reaches up to here. Now, when he reaches up to here, does it look like the sellers are dying? Yeah, they're on their last breath. You know, the sellers are dying. And it also looks like the buyers are coming back, which means the big boy, the original gangster, is back in the game. He's coming back. He's showing his presence. Okay, now once this happens, you're also noticing divergence at that moment. Okay, divergence gives you a clue. The OG gives you a clue. And then you have this, slowing legs giving you a clue. And then you have the major clue from the buyers coming in saying that he's an indication as well. Now, once you see all that stuff, notice when the buyer comes in, he doesn't really make a higher high yet. He's right there. No higher high. If there was a higher high, we'd want to catch the buy off of this support resistance and then buy it. Since he's at resistance and he has not breached it, okay, since he's at resistance and he hasn't breached it, he's going to do another test down. And we're going to determine, based on the test, how strong the quality is. Now the test comes in, how strong is the test? Siraj, no. Unfortunately, not this style. This is something I teach over at Forex Watchers in the community program, the elite course, basically. But it's something that you have to learn to read, basically. Raganathan, also good. Alright, so it comes on very, very strong, but then no lower low, and it snaps right back with an exhaustion, as if that low never happened. So now you have the test is holding, and then he starts to maintain grounds here. Just candle after candle after candle. This is a 4-hour candles. That's 16 hours of sideways movement, just maintaining grounds. And then weekend hits, and the market starts up blasting north. Because all the sellers, but from here until here, can you say now they're exhausted? They're finished? So notice, to reach this level of understanding and mastery of reading the markets, we use not just one thing, not just divergence. We didn't use just exhaustion candles. We didn't just use how big is the leg. We didn't just use how much retracement is there. We didn't just use who's stronger, the buyer seller. We combined everything to our knowledge, to our disposal. It's like using, you have the Batman belt and you use the tools you need for the right time. But you need to know all the tools, but you gotta use all the things. Yeah, and psychology as well. You get to see what's going on with the markets. Is there someone, Now, usually this is what happens. When you see this buyer come in here, most people get excited. They buy here. These are amateurs, they're not newbies, they're amateurs. The newbies will basically sell here. They will sell in a downtrend right there. So a newbie mistake is there. They're going to sell there, and they will lose their money because they're selling too late. The amateurs, they know not to sell. They know they have to buy only because the trend is up. But they will buy it at the first sign of buyers. And where do they put their stop losses? Right there. Okay? So they're going to get hit. And once they get hit, they get scared thinking, maybe the sellers are back. Then they try to sell the poor thing, and they get hit the second time. Okay, sound skipping again. Okay, 1 second. Yeah, I don't know if you guys can see my screen, but on the top right, my connection says fair. Give it a second. Okay, the sound should be back to normal for everyone. Yeah? I think it should be fine now. I should stop my downloads? No, I have no downloads. I'm not a torrent person. No downloads on my end. Okay. So, yeah, it's recorded anyways, just in case you guys want to watch it again. It's recorded. So, shall we continue? Let's continue. I think so do you guys understand that, let me put the chat box back, that mastering divergence is a skill that needs to be used together with reading the markets, cannot be used alone. If you use it alone, yes, it gives you a very good heads up, but to know to use divergence either here or to wait for it and use it here and then get into the long can make a difference between winning and losing, and it can also make a difference between winning small and winning big, right? So wouldn't you like to add in that additional 10-20% of knowledge and make sure that you can limit your losses just based on that extra knowledge? So it's worth investing some time into yourself to learn stuff like that. Okay, so let's do some more examples and see if you guys are catching the drift. Okay, we'll do some more examples and then see if you guys can follow along. Okay, give me a pair, guys. What pair do you guys like? Gold we'll leave out of this for now. Pound yen. Okay, there's 2 for pound yen. Let's do pound yen. Okay, pound yen. All right. Ooh, pound yen. This thing has risen back up. I think we were looking at this for a pullback sell, but he's come much stronger up. Okay, that's gonna be fun. Okay, should we use a candlestick pattern for confirmation of the divergence? Mitch, no, not necessary. A candlestick pattern is a single candlestick pattern stands alone. But if it's there, it's extra bonus, but it's not something that should be required, I would say. Jack, am I right that I take Euro USD always as a leading pair? No, not as a leading pair. Leading and lagging has to do with who takes the lead in moving. For example, are you guys all of you guys are on top of the yens? Have you guys looked at the yen markets today? Yeah. So a quick overview on the yen markets. Now this is pound yen. Let me go to USD yen. Now, what's the USD yen doing right now? Yeah, it's retracing. It's going up. Okay, has he made a higher high? Okay, no. He's made a higher high only compared to the previous swing, but not against the second one. Okay? Plus, he's below major support. Okay, keep that in mind. So this is USD yen. I'm going to go back to pound yen. Pound yen, major support is here, and he's just gone up above the first higher high, barely, not the second one. What does that tell you in terms of strength? Which one is stronger in terms of retracing? USD yen. That's when we say the USD yen is leading to retrace and pound yen is lagging. They're both doing the same thing, it's just one is leading. So now if USD yen is leading for a pullback, if you're thinking of selling, which is a better pair, USD yen or pound yen? Yeah, it would be pound yen. USD yen is leading to pull back. Now, why is it pulling back so hard? Okay. So again, I think you'll get all this information in the fast track course. But Brexit. But you'll get all this information on the fast track course. Let's not get away from divergence for now. Let's just continue with that. Okay, so let's go and look at some more divergences. Now, would we say this is a divergence? Let's look at some extremes. We have a high here. Let's not diverge from divergence, exactly. And then we have a lower high there. We have a high here, same spot. And then we have a higher high. Sorry, worst drawing ever. Okay, then we have a higher high, something like that. There's a divergence there, right? Okay, so now this thing crawls up on you and then just drops. Okay, of course that's the Brexit moment, but a divergence did show up as well. Here's another one. From this high to this high, it's either a higher high or equilibrium. But if I do the same thing lower, we don't have that situation. We have higher high to lower high. That turns you a turn in the market. Now this one is a lot easier to read because you can see the slowdown of the buyers in this market. Now, what kind of market is this? Yeah, it's a downtrend market, yeah? So in a downtrend, when you see the buyers struggling like that, isn't that a good sign? You put that together with divergence, the opposites, and you get a hint that, okay, something is not right. So you look at each move. Let's understand it, because this divergence happened. If I went like this, I would say the divergence started happening there the first time, which is, oh no, not here yet. It has to be there. Okay, so it is here in this area when the divergence happens. Okay, so let's look at this move up. It moves up, pulls back. Has he breached this guy when he pulls back the first time? No. Then he goes up stronger, and then he pulls back. Has he breached this guy when he pulls back? No. But this time, even though he went up stronger, his pullback is also strong. Okay. Now he goes up this time weaker, and his pullback is still medium. Comes down 50%, but doesn't breach this guy. This whole time, it's also creating an uptrend line, just moving inch by inch by inch. Then he pulls up higher, and this time, no higher highs. And then he collapses very hard with that red bar. That's your sign, together with your divergence, your resistance, you name it. They're all piling up here. Here's your resistance. If this was looked at a downtrend, followed by a range to refresh the market, followed by the next downtrend, that's a very good sell opportunity from the top of the range. Okay, to continue with the downtrend, if it does. He comes down, he pops back in though, but then he gets back down lower again later. Okay, so decent amount of money from there to there. Okay, I don't know if it would reach down to here, but the target objective would be based on your current market condition. And in this particular case, it was in a range. Okay, so make sense? Did that one make sense? So the more difficult one was the next one, was the Brexit move, where it just creeped up on you and dropped. Those are harder to catch because there's no confirmation. It's just pure risk. We can't just pull the trigger, right? So you want to watch out for stuff like that. You don't want to just pull the trigger on anything. Okay, next pair, Euro USD. Okay, this can be applied on all time frames. You don't have to do it on the daily because I'm doing it on daily. Okay, we'll work from Euro USD, work to pound. Okay, let's remove all this. Oh yeah, so how'd you guys do on the NFP? Were you guys with me on the NFP last on the webinar at FX Street? How many of you guys attended my webinar at FX Street, where I did the aftermath of Brexit and NFP outcomes? No, none. One, Joe. Okay, I think we talked about pound, and we talked about Euro USD, I believe. Yeah. And if it didn't cause much panic. I think it was New Zealand USD was the other one, where we said it's gonna bounce around sideways before going up. Yeah, so these are the results for those of you who have watched that webinar. Here's the outcome. These are the drawings from that day. Still haven't removed them yet. Okay. Alright, so back to Euro USD. Let me close all this. Alright, let's take a look at this now. Okay, so divergences on this one. Now, what's this? Is that a divergence? No. What about this? So now it's a divergence, right? So it wasn't a divergence on the first pullback, but on the second major pullback, it does become a divergence. But that seller is way too strong. It's not a slowdown. If it was a slowdown in this uptrend, we'd be like, yeah, well, let's fade it. Let's try to buy it. But the divergence has happened. Now the slowdown is beginning. So we're going to have to watch it. So far, sellers are still in control of the market. We're going to have to watch it carefully. Nothing yet on this one when it comes to live analysis. Now, let's take a look at the other one. Here's one here. I'm going to connect this high to this high. And then down just below, I'm going to connect that same high to that high. It's a slight higher high. So, okay. No, nothing there. Not as prominent. Okay. Here we go. Here's another one. Low to high. And low to lower. Not higher. How do we do this? Shall we read this one? Is that a divergence? Do you guys all agree? All right. So, flow of the market. Up. Sideways. Up. Starts dropping down. Coming down to challenge these boys. Okay. So let's take a look at how each legs move. So we got a first push here. And then a slowdown. Any signs of sellers dying up until that point? Yes, no? Audio lagging? No? Next move down. A little bit less, but any signs of the seller dying? Any pullback? Notice I'm stopping at the halts. I'm not stopping at one green candle. I'm stopping at when I see a variation of multiple candles stopping or pulling back. Okay, so keep that in mind. Okay, the next thing, he goes down stronger, but snaps right back 100%. As if that low doesn't exist. And notice all of this is in the boundaries of this. Either if you guys have training of supply and demand, it's in that area, or it's in this trend refresh area that says the up might continue. So whoever was the buyer here, he doesn't want that price to break. He still wants that price to hold. Yeah. So once he comes up to here, just like the last divergence that we talked about, when he went up 100% from here to here, did he break resistance? No, which means wait for the test. Wait for the test. Remember I told you, this is the point where the amateurs start buying. And that test right here, it will come as far low as the recent low, and it will try to kill them. If not, it will start making lower lows, and we have to still wait. Okay? But once this happens, and then the candle starts moving back up and starts closing higher, now it's your sign that time to get onto your longs because the markets are changing directions. Okay? Does that make sense how we can put all that information together? Now, notice here, there was less information available. There wasn't an exhaustion candle like last time. There was a sharp reversal here. I think in the fast track course I call it a V formation. Okay, and then there was a test phase here, and then a major rise there. Okay, would we have to wait for the candle to close? As of right now, yes. If you're advanced, like I said, I don't know if any of you guys are here, I don't see any names from anyone at Forex Watchers community, the elite community, but generally they don't really wait for the closes. They can sense when the markets are moving, and they get in. because it's all about getting in earlier than later. So we work with timing a lot, which means getting in here is unknown, getting in there is very late, but getting in here gives you the best opportunity. So there's a lot of emphasis on and training just on timing that we do a lot. Okay. All right. So moving on. I think I saw pound USD on the list as well. So this one all good. Siraj, it's on the site. Those of you, there's waiting lists and stuff. I think so after the fast track course, the fast track course is free, and then there's the elite community, which is this thing here. This is the elite community. This is where these are people I personally train. Most of them are one-on-one members, which have come to me in person, either in Thailand or London or Cyprus or Canada, and they've trained with me live. So they're highly trained people, and on the left side we have our team. So these are the people who used to be members, who I've hired, and they're now working with us. And these are the members who are undergoing training still. And so there's stuff like this as well. They gather, they meet. It's not like it's just an online community, We're the only community where people actually meet in person. So, and we're not afraid to do that. So that's, I guess that's the best thing that separates us from the rest. All right, so moving on. So the community, for those who are interested, we do have some seats open up at the end of every month. It's first come, first serve. So whoever gets onto the waiting list, they all get an email notification, and then whoever jumps on it first gets in. Okay. All right. So where were we? Back to Euro USD. Okay. So we were going to pound dollar now. Let's take a look at pound dollar. Okay, I'm gonna give you guys one. Let's go through some examples quicker now, and you guys tell me divergence or not. Divergence or not, okay? So, here. Yes or no? Yes, okay. Here. Yes or no? Yes, okay, here. Yes or no? Yes, okay, here. Good. All right, you guys are catching up on this. Okay, good. Again, as a rule, if you're connecting your highs, connect your highs on the indicator also. If you're connecting your lows, then connect your lows on the indicator also. Okay, don't connect anything in between. Don't cut through charts like this and be like, oh, look, that's a higher low. Don't do that. I've seen many people send me pictures like this saying, is this correct? And no, that's not correct. But now you know. But yeah, try to never cut through data. Even if it's on your charts, even if it's on anything, never cut through data. That data was there for a reason. Don't cut through data. Okay? How do we know how big the change in trend will be? That has to be determined by your read of the entire trend. That's a very good question, actually, Manish. I'm impressed. Because it's like this, right? Like, notice this massive trend coming down. And then you have this major sideways movement. And then you spotted, let's say, a teeny weeny divergence here. How do you know that divergence is not going to just go from here to here and it's going to go from here to all the way here? That requires you to understand all of this to all of that. Okay? The duration from this to this, and then from that to that to that to whatever will happen next. It's understanding that entire logic and putting it all together and being like, not yet. I'm still going to hold on. I'm still going to hold on. It's still a sell. It's still a sell. You know, stuff like that. Then you start thinking partially trader and partial investor, which is good. Which is good. Okay? And I want this for all of you guys. I want you guys to start trading in such a way where trading actually fulfills why you're trading. Okay, one of the first things I do with all of my members is ask them, why are you trading? What's the purpose? If you do not know your purpose, then everything you do in trading is wrong. You need to know why you're trading. If you want to be free, you want to travel the world, you need to trade a higher time frame. Okay? If you want to be sitting in front of your computer all day long and you love trading, then yeah, you trade 15 minutes, 5 minutes, 1 minute. But if you want to use that money, I suggest a higher time frame. Okay? So it's very important to sit down one day and just think, well, you know, what do I want to do? What do I want to do with my money? Okay? I want to make 10% a month on my money. Okay, so you're like an investor. Stick to a higher time frame then. Higher time frame for that, for sure. For those of you who are trying to make an income, I would still say stick to a mid-sized time frame, 1 hour, 4 hours. And for those of you who have a higher level of income and have the thrill and adrenaline rush, but the capability to control the adrenaline rush, smaller time frame can do it. But remember, a smaller time frame is harder than a higher time frame. Always, always, always. Okay? Naveen, do you ever use harmonic patterns, bat, butterfly, garden leaf? No. I got a lot of questions about bat. So we might explore a bit into that. And we might explain it in our way. Because bats, it's a very common question people have been asking. So we don't like it, but we'll explain it. And we'll give you our twist, our version of it. So keep a lookout for that. Maybe the next webinar, maybe. ATR. Okay, so ATR up here. A quick answer to ATR for Papo. Over here, ATR, it says that my period is 14. 14 means it's going to look back 14 candles and it's going to give me the average true range. That's what an ATR means, which means right now the number on the ATR, if I look on the number here, it says 0.025, which means 25. It's 253. It's like reading your pips. So it's 253 pips. Okay? So the last 14 candles, the average movement is 253 pips. Does that make sense, Papo? So in the last 14 candles, if you combine them, the average movement is 253 pips. So if I'm trading and my target is 500 pips, and I look at the ATR, does that seem reasonable? 500 pips of a goal for a target? No, it seems a little bit out of reach. But if my target is 180 pips, now I know I can reach it, and then I also know maybe I can go for 200 or 220 if it allows me. Okay? So an ATR is a good judgment tool to get an idea of what's the current situation of the market. How much movement is there? Why is 14 used all the time? It's 2 weeks. 14, 2 weeks of candles, basically. Or, if you're doing 1 hour charts, then 14 only means 14 hours, which would mean 1.5 session. So it's very important. On the daily chart, 14 is important because that's 2 weeks. That makes sense. There's news, market changes, blah, blah, blah. 2 weeks is good. But on an hourly chart, if you use 14, you're doing 1.5 session. You probably want to do 8 or something like that to get an idea of what did one session do. So understanding why you choose 14 or 8 or 7 or 2 is very important. Okay. All right. Sorry, there was one more question in here. Where do you go? When you be coming to Chicago? Chicago, no plans yet, but maybe next year. On my because from London, I might be coming back to Montreal, and then from Montreal, my family lives near Chicago, so I always go through O'Hare. So I do come by Chicago quite often. In fact, I got to meet the founder of TradingView also. He's in Chicago as well. So, do you have any recent visit to Tanzania? No, not yet. I've never been there. So need to look into that maybe. Sounds cool. No idea from Malaysia as well. I will be back in Thailand next year. That's currently home for me. I live in Bangkok now. So guys, do me one thing. So, promise me you guys are going to take the full fast track course. You're going to do it from the beginning until the end. You're going to practice it as much as you can. Yeah? It's free now. Please try to avoid the psychological barrier of, when I built the fast track course, my first thing was I'm going to make it free. But then all my administration, my managers and everyone's saying when you give stuff out for free, people don't give a crap. They're so lazy. Charge them out of their asses and they will focus. I get that, and it works like that. But I'm going to be sincere with you. This is very valuable information which used to be charged, and now I'm making it free for you guys. So please use the opportunity to learn it. It was a paid service, a very expensive paid service. Use it, learn from it, and if you feel your trading has improved quite a bit, then you have the elite community to think about, if that's something you want to do. You don't see advertisements from Forex Watchers ever on TV or on media or anything. We don't advertise. We're only word of mouth. So, take it as you go. As you feel fit, our doors are always open. Okay. Late in Thailand now. Stay there too. Maybe I see you in Bangkok. Oh, great. Yeah. If you guys are in Bangkok, it'd be great. Do you know when you will have the new educational only access for Forex Watchers? We've turned that off. There is no education only. We believe if you want to do education only, it's better to join the community. It's better to learn with the community. So you can enter conference rooms like this, the one I'm doing right now. We do 2 of them per day. But we're just looking at the markets live and we're saying, okay, what's the opportunity? What are we going to do? After we do that, then they build their own analysis. For example, this is Armo. He's built USD CAD and New Zealand yen based on his webinar that he did this morning. So here's one. He says 1R minus 1R on this one, which means he's lost 1R, 1 risk to reward. Here, he's made plus 2.8R. He's made 2.8 times his risk on this one. Okay, so they trade session by session. Okay, and here's his video on his post analysis on how he did it. Okay, generally, I require everyone to do 3 videos. Before, a during, and after. Okay, it's something we like to take pride in. Do one prior, do one during your trade, and do one after your trade to recap. Okay. Sean, if they don't pay for it, then people don't see the value in it. Long way to state yes. Yeah, and it's very sad. This is why, unfortunately, the more expensive our courses become, the more valuable we become. But it's sort of somewhere inside me, I don't feel comfortable with that. Because I want to help, but I can't help because people abuse the cheaper or the free things. So yeah, it's weird. It's weird. So I did fight with my management to keep the fast track free at least. Did get into a lot of heat by that, but it's okay. It's a decision I took on my hands, and I'm paying for it out of my pocket. But then the elite course will still be there, and I've helped lower the price for that on the elite course. It's no longer 5,000 for memberships. It's around 1,500 now. So, okay, where can we see pricing, Naveen? For what, Jake? Are you talking about the elite course? If you just click on the elite course on forexwatchers.com, it's all there. Our elite community, sorry. Do you know when you will have see how long will you think it would take to learn it? Juan, yeah, I think your question is how long do you think it'll take to learn it? Okay, here's one thing I do recommend. The fast track course is very powerful and it's in a nutshell. However, if you want to apply the entire knowledge that we give out, let's say the community and stuff, I recommend not coming in for just 3 months or so. I recommend trying to see that you're going to be coming in for at least 6 months or a year or something like that. Because it does take time. It does take time to fail. It does take time to learn from the failure. It does take time for us to notice the pattern of, wait, he's not doing this based on the education. He's doing this based on his psychology. It takes us time to notice that psychological pattern as well, to say, oh, watch out, be careful from this, you know. So we have to observe all this, and it takes time. It cannot be done in a month's time or 2 months' time. So anyone who's looking for a get-rich-quick scheme, this is not the place. This is not the place. You know, you guys know our stuff. We do it as best as we can, and we teach it the best we can. So, is it legal to hedge 2 different brokers? I guess it is. You know, go for it. I know people used to do that a lot back in the day. I don't know how convenient it is anymore, but they used to do that. The support and resistance doesn't work on your course. Okay, Mitch, thank you again. I will get that changed again. Let me. I should write all this stuff down. Okay, so we got the next lesson link that's not working and support resistance. Thank you so much, Mitch. I'll have the team send you a coupon code for the community. We'll get you a good discount if you ever want to join. Thank you. Thank you so much. Please address support and resistance. Yeah, I will, Mitch. I will let them know as well to get that fixed. Don't stay too long, soy cowboy. I know that street. I've partied there a couple of times. It's an interesting street. Okay. Sean, you can't hedge in the US if you're on the same broker. But using multiple brokers, I don't know. Maybe. You didn't hear it from me. And I'm going to cut this part out from the recording. You didn't hear it from me. Is a pro trading strategy in Urban Tower still your favorite? From the strategy systems, yes. Tim, it is my favorite. Pro trading is probably the most powerful one. Urban Towers is probably the closest as you're going to get to how I like to see the market. But both of those still require you to take a very static approach. So I want to remove people from going static to more dynamic. And dynamic means understanding the flow of the market and you being like water and just moving with the markets, you know, just bending and flowing around it. Okay. Any visits to Germany soon? No. No plans for Germany yet. One of my staff is from Germany. He's, in fact, you guys might meet him. Sometimes you get an email from him. His name is Robert. He's from Germany. If you guys get a response in German, yeah, it's the German staff that we have. Excellent people. Okay, guys. So let's end it there right now. We've done a full hour. I wish I can answer more questions. We'll catch up again in 2 weeks. Hopefully in 2 weeks, when you guys do the fast track course, you'll have more questions. I've reserved these webinars for people who have questions from the fast track course to make sure you get better and better and better. So Do the fast track course, fulfill your promise to me, and I will see you guys in 2 weeks' time. Thank you all for coming, guys. Have a wonderful day. Cheers. Bye for now. Love you guys too. Bye.